Hey everyone, Chinese EV manufacturer and seller XPENG is down 79.5% off its high. Is that stock a buy for 2024? That's the question I'm going to answer in this video, looking at its recent prospects, its longer term performance, and weighing them against its valuation to determine if XPENG is an excellent stock to buy for long-term investors. Before I get started, I want to thank Ron Matthews, the subscriber who recommended this video. Thank you for your request. And if you want me to do a video that you're interested in, please subscribe and ask in the comments section below. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So after experiencing a brief decrease in revenue in the mid part in the beginning of 2023 and 2022, XPENG is really accelerating revenue with its new models that are proving to be popular with consumers. In fact, management expects deliveries of vehicles for the fourth quarter of 2023 to come in at around 60,000 units at the midpoint, which would be an increase of about 168 to 186%. Phenomenal growth will be achieved if it hits these targets, with revenue coming in increasing by between 147 to 164%. XPENG also announced that it was launching its new 7-row vehicle coming out in January, and that could help spur sales even further. The company is making good headway in launching its new models, and they're gaining traction with consumers again after a brief slowdown in revenue. So here's a little bit of a longer term picture of XPENG's revenue over the last couple of years. You can see revenue growing very nicely after hitting that ceiling and then coming down a bit. And now it started to bounce back up, 3.21 billion in revenue in the most recent quarter, but that was only up slightly year over year. In the upcoming fourth quarter is when management expects revenue to really explode year over year and quarter over quarter. Now, they hit the target from the previous quarter, and they've been pretty good with hitting the targets they've estimated, at least for the next quarter. So it can be reasonable to assume that XPENG will hit these targets. XPENG has also done a good job demonstrating economies in scale. Economies in scale is one of the most desirable characteristics you can find in an investment. In the example I have created here, sales grow from 100 in year 1 to $115.76 in year 4, while net income more than doubles from $4.50 to $9.47 in year 4. This company demonstrates economies in scale. As its revenue grows, its profits grow by a larger magnitude. Not every company can achieve this kind of effective growth. Here's how it works. This is a typical categorization of an income statement of a publicly traded company. Cost of goods sold is what's called a variable expense. That means cost of goods sold is connected to sales. Other expenses like interest, general and admin, and depreciation are not connected to sales. You can see here depreciation stays the same at 25 whether sales increase or not. The same is true for interest expense. It stays the same whether sales grows or not. You can understand your interest payments do not increase when your sales increase. Overall, businesses typically have a mixture of fixed expenses that are unrelated to sales and variable expenses that are. When sales increase, the business leverages those fixed expenses, as we see in this example, and profits grow by a larger magnitude than the increase in sales. That being said, you can see XPENG's operating profit margin exploding from negative 160% all the way up to above negative 40% before turning downward along with that sales decline to negative 50%. Management said it expects its gross profit margin and operating profit margin to improve as it ramps up deliveries and ramps up revenue over the next couple of quarters with the launch of these new models. Now, that would be very exciting for investors if they are able to turn this around again and start moving this in the positive. Now, let's look at what analyst consensus estimates are for XPENG. The consensus estimate from analysts is that it will grow its revenue by 89% in 2024, driven by the launch of its next generation technology. That is also likely to improve their earnings per share. Analysts expect it to improve the loss per share from $11.30 in 2023 down to $7.21 in 2024, and further improvement to $3.73 in 2025. So analysts expect XPENG to deliver significant gains here over the next year, but also over the year after that. So even in 2025, revenue growth expectations are for 31% growth. Certainly robust growth here from XPENG, and investors will be happy to see the company return to growth after coming down a bit from the recent developments. So looking at the company's balance sheet, you can see a relatively strong balance sheet here with $3.36 billion in cash and short-term investments and $1.566 billion in long-term debt. Anytime you have cash and short-term investments well ahead of long-term debt, the company is in a strong position because it can use the cash to pay down the debt and still have cash left over, right? In this case, if it pays off all its debt, it'll still have $1.8 billion in cash left over. So its balance sheet is strong. And also, this is a good point to remind everyone of the strategic investment that Volkswagen has made in XPENG. And that's always a good sign to me when I see a bigger rival in the same industry investing in a startup, in a growth company. That shows me that they see something strong in the company. It's better to me when I see that kind of investment versus, for example, another EV company like Lucid, which has the Saudi Arabian investment company as a strong backer, or Rivian, which has Amazon as a strong backer and investor. They're not in the same industry. So it doesn't shed any light as to the performance, the business model, the management team. But when someone in the same industry invests in you, that demonstrates that they see something in you that investors should take note of, right? If a manufacturer invests in another manufacturer, the manufacturer that's making that investment, in this case Volkswagen, knows a lot about the industry, knows what it takes to be successful in the industry. And so if they're making a strategic investment in XPENG, I think it says a lot more than if it's an outside, non-related investor in a company. I thought I would mention that here. This is something that's a sort of intangible, qualitative thing that investors should keep in mind with XPENG. And finally, I wanted to look at XPENG's valuation. It's trading at a forward price to sales of 1.746, which is slightly too expensive for me to recommend this stock as a buy heading into 2024. I would prefer to get this stock at a forward price to sales closer to 1.2, 1.1, or I would like to wait one more quarter to see if XPENG makes another step forward in progressing in its vehicle margin, in the operating profit margin. If it does that and it continues that pace of strong growth, then I may be willing to pay this price of a forward price to sales of 1.746. But given that this accelerated, really next level growth is only expected to happen like right now in the fourth quarter, I want to see that happen, and then I want to see the forecast for next quarter, and I want to see how that improvement in revenue impacts its profitability, and then I would be more willing to pay this price. It's just such a sudden ramp and increase in sales. I want to see that happen first before I'm willing to pay this premium price, the 1.746 forward price to sales. Because if you look at, for instance, NEO is trading at a forward price to sales closer to 1.1. And so that's why this is a big premium over NEO. I want to see the company deliver on this phenomenal growth it's expecting before I would want to pay this kind of premium valuation. But I wouldn't be surprised if XPENG is one of the EV stocks that I upgrade my recommendation for in 2024. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.